Happy 4th of July, everyone. I do believe this week actually will have some bullish emphasis behind it, not only for the market, but also some individual tickers, which I will share in this video. Things are looking a little bit more brighter for the month of July. However, in my long-term thesis, I do believe the fall will have a fall, and you do want to stick around in this video today for me to explain what tickers may have some upside for right now. And also, Wednesday is going to be a very, very important video. I'm going to be doing my long-term thesis with a possible map of what we could see later in 2022 and also early 2023. You are going to be very interested in looking at that video, so do subscribe below and we'll head right into this video. So for starters, we did have a little bit more of choppiness going into the end of the weekend on Friday. You could actually see here this pivot trend line that I had drawn out in our previous weekly recap video goes all the way from the low we made from June 17th, and then it goes all the way across, hits this level that we had on June 30th, and then we bounced straight off of this on July 1st here. So we've had 3 touches of this trend line, which is typical for strong trend lines. You get at least 2 up to 4 or maybe even 5 touches depending on the strength of that trend line before it maybe breaks through or has a decisive move upwards, which we did end up having a decisive move upwards on July 1st. However, there was not much volume with it, but you do have to remember SPY trades differently than an individual ticker, and I don't focus as much on the volume just because we can run and continue to run all the way up to 4,000 off of low volume if it wants to. So the key levels I have right now is, one, we definitely need to make sure this trend line holds here. If this breaks for whatever reason this weekend or this week, this would mean more downside is to come. However, I don't believe that will be the case. I do believe, however, we will get above this key line, which is at 3,830. This is the key kind of supply zone that we have right now, and I'll draw it out for you because there is a small range of this. It's roughly 3,830 to 3,836. This is the key supply zone that we do want to get over, at least if you are a bull. If we do get over this, we will test the next line, which is my purple line right here. This one goes all the way back. If I go back to here to the top when we were consolidating before this very fast and aggressive move down, this one connects all the way to here. This is the first pivot on June 27th, and I do expect this to get tested this week, and it will act as some form of resistance. Now, the key is to have a daily close above this purple line. If we do have a daily close above this purple line, the next line that we will have a resistance at is all the way around 3,920. So that is very, very big. 3,920 to 3,930 is going to be a key resistance level, and that's quite a ways away from our current level of 3,825. That is a 100-point move from where we are right now, and it's very viable. We could see something like that this week off of low volume, especially after a holiday. If you remember, I've talked about it before, holidays tend to have kind of like a reversal scenario happen where maybe if you sell off going into a holiday, you pop up the other way and actually have a trend change from that holiday. So this could be the case, especially for 4th of July. It tends to be bullish the week of the 4th. So there's a very decent possibility we could have some form of a rally during this week. Remember, all upside moves for right now don't have to be a rally, just because we've seen rallies in the past, kind of like over here for a few days, and then especially the one up here in March. We had really large bear market rallies. However, every up move does not have to be in the form of continuous green every single day. I think people need to realize that first, because you don't want to play it too aggressive in a bear market. At best, if you get a few green days in a row, definitely take that profit because you don't want to be holding that and wait for it to continue up when it could pull back, and then you may have to stop out for a lot less profit. So take your profits quickly, especially in this market. That's the best advice that I have for you. One thing I do want to talk about here is the SPY flow we saw on Friday. We actually had a lot of put flow hit the tape, not only during the day, which you can see here in Eastern time, but also after hours. And we've seen a few of these days from the past week have a lot of after hours put flow, and we actually saw continuous downward moves after that put flow. Nothing too excessive. Remember, if you look here, we did actually see quite a bit on this June 28th day, and we had some more downward moves, but nothing so extreme like it over here back in early June. Definitely some downside, but nothing extreme to like below 3,700 or something like that. But we did see a lot of put flow after hours on Friday, which leads me to believe there may be a potential gap down. At first, just based on the chart, I was expecting some form of a gap up actually above this 3,830 level, which would be very, very bullish if we did get a gap up above. However, this put flow may seem that there could be a different scenario going into Tuesday. I still have a bullish outlook. They could profit off of this just from the weekend. Could be a protection over the long weekend because we had 3 days. So that's something to note. I want to and also will value put flow this week a lot more than the previous week because, again, this could be hedges for this upcoming weekend. That was a 3-day weekend. So something to look for. Again, bullish if we can have a gap up above 3,830 to 3,836. That'd be very bullish. Knowing the market makers are just going to make it hard on us and probably will gap in the middle here, so barely a gap at all. So we're going to have to play the breakout for continuation. So you're going to be watching this level come Tuesday if we do test it. And if we're able to get up above decisively, especially on a 15-minute candle close, that is something that I will long up until this purple line here, which will be a nice 70-point move if we do get this thing to start running. And there's potential to continue even higher off of that. Now, the next thing I want to talk about here is individual tickers. Apple looks pretty bullish, and it's not only Apple. There's a few other tech stocks that do look bullish, but Apple is by far one of my favorite ones. You can see here I've been charting this kind of downward wedge for a while now, all the way since the beginning of April, end of March, and this has been a downward wedge trading within so far. And actually, right now, we hit the top of the yellow here on this resistance, and we're starting to curl, which is a very bullish scenario in a downward wedge. Typically, before this thing starts to break out of the downward wedge, or any ticker for that matter, you'll see rejection for the last time off of the top resistance, and then it will curl just like it's doing right here before we start to have a large upward move off of that. This is what I'm expecting to happen in a break, and I'll go over here to the 50-minute chart to get it more precise, but a break of this roughly 141 to 142 range is going to be very, very crucial, and is something that could send this thing all the way up to almost 150, honestly. This was a previous dark pool print, which will act as a resistance and also supply zone up here. So this thing could go up to 149, 150 pretty quickly, and this would be a big leader in the market and would help the S&P 500 to also get a bid and start to rally with it. Another ticker that's actually interesting is AMD, and now semiconductors are very, very weak right now. I would not want to mess around with these, especially because the downward wedge on this ticker is far larger. However, we did fall below the wedge that I have charted out, which is pretty bearish that we're below. It is still possible we can get back above, and a weekly close back into this is actually really bullish. We could see the top of this resistance. As of now, it's actually at a key demand level, and it's a tight demand level. It's not something that's wide, so this actually is really good risk reward on the daily candle. And the reason I say that is because back here you can see we had this act as a support 1, 2, 3, 4, 5 times before rallying into 2022, end of 2021, where this thing just started to crank along with NVIDIA. This is now going to be that 6th time that we have tested this, and it's very possible we could fall below, yes. However, still very good risk reward, because if we were to enter theoretically around 73, your risk reward is a daily close below 72. If you have a daily close below 72, then you would cut that. Otherwise, it's very likely that we bounce back up. You could trim around for the retest of this yellow line, and other than that, you could hold for a little bit larger of a bounce. Again, remember, semiconductors right now are pretty bearish, and this is very weak. You saw a lot of strength in other names like Apple, Microsoft, Google on Friday, and this was actually red 3.66%, as you can see here on the day. So these are still weak. However, it is at a key demand zone right now, so something to note going forward, and we could see a bounce off of this, which could support the market as well. One last thing I want to talk about is the DXY. This actually has seen a lot of resistance in this key supply zone, and I've been charting this one and putting it on the Twitter account lately. We actually had all the way back in early June a few rejections of this supply zone, and then fell down a ton, which actually helped the market kind of go up and start to have that upward trend because the DXY was falling. And then we've actually tested this again up until this past week, and we had a resistance 1 and 2 times so far up here. So the bulls definitely want, at least the bulls for the market, want the dollar to fall below this purple kind of range that they have, the supply range right now, which would be very bullish for the market as well, because the DXY is starting to fall, which would help aid the market. And as of now, it's looking pretty good because we did have a double top over here, at least for the short term. And the reason I say that is because if you do go to the monthly chart, you can see here It has formed a form of a cup and handle so far, and we are above a key level of 103.5. The longer we stay above 103.5, the more bullish it actually is going forward. The bulls in the market want to make sure that we have a rejection very quickly on the monthly candle below this level. Otherwise, this thing will actually start to continue up, which would not be good for the market at all. So something to watch as well going forward. But other than that, do watch the flow this week. Remember, I am valuing the SPY put flow a lot more during this week. However, as of now, I am bullish on the market until we have a break below that key trend line, which I showed you earlier. I do encourage you guys to make sure you continue to have good risk reward going forward, because things can be very choppy in the market, especially now. And I will be in the Discord chat to help with any questions you may have, whether that be through trading or the platform. And last thing, we do have a 4th of July kind of like a sale going on right now, one of the best sales of the year, so you can click the link below to get that. And I will see you guys in the Wednesday video, which is very important.